Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 7th day of August, 2019. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. I'm putting a chart up of the S&P 500 Emini Futures. And there it goes. If you can't see the chart, go to our homepage at cfrn.net. On the right-hand side, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from the desktop, and you still want to join the show, go to youtube.com/CFRN/live. There you will find a live, real-time simulcast of the show as it unfolds. Brought to you by the good folks at YouTube. Thanks, YouTube. All right, this is a 30-minute chart we're looking at right here. Yesterday, during the broadcast, I put a couple of the current alerts up on the screen so that the audience could take a look-see. The initial was considered being short here, 28.45. Price dropped to 28.46. That was the swing low here. So I then put out another alert. Now remember, price is always trying to get to a weekly trading zone. Either the one overhead or the one below. You just got to figure out, discern which zone is it currently trying to get to. Okay? Now, at 28.46, that would have signaled to me that price was most definitely trying to get to the zone below. I'm sorry, 25. We got down to 26. We didn't touch 25. Okay. So I watched the market doing about face. Price is always trying to get to a weekly trading zone. So if it turned away from this one, it only leaves one other option. It's always the one below or the one above. So I put out an alert to hedge the ES, consider buying 2865 up to 2880, a final target, 15-point move. Why 2880? Because it's a weekly trading zone. And when price approaches a weekly trading zone from below, we expect it to be good resistance until it isn't. It was good resistance. So 2865 to 2880 went off without a hitch. Now we do know that important prices and important areas are almost always tested. We know this, right? Okay. So let me grab this, pull it over here, like so. Not only did we get the move from 65 to 80, we got back below the trigger and caught a move from 65 to 74. Now, I'm going to show you in a minute why that moved to 74 or ran out of steam. Price then gets back below the trigger again, and we get that same 15-point move from 2865 to 2880, and then some. Okay, so 1, 2, 3, right? Now, well, what about the original alert that I had put on the screen yesterday to consider being short 2845? Is that dead? Not at all. We can manage to draw a straight line across there, like so. May not be straight, but it's pretty close. We come down through 2845. We had a final target at 2840. I highlighted where we might find potential support. And then, of course, we got the zone down here as a target. And we expect that zone, when price gets there, we expect the zone to be good support. Until when? Until it isn't. Okay. So, 1, 2, 3 triggers on the long side. 1 trigger on the short side so far that exceeded the final target. In fact, the swing low, 28.23 and a quarter. Now, this move here, it didn't make it back up to the zone. Let me show you why. A red and falling CFMA1, a red and falling CFMA1 is always potentially good resistance. Say it again. A red and falling CFMA1 is potentially good resistance. Just as a blue and climbing is good support when price approaches it from above, which it always will. So you see here we had the bullish cross. Now I put this arrow on the show yesterday. All of you that were here saw me put the arrow on, saw me draw this little line, and I wrote potential support. Now let's see if I can draw a straight line. Boom, 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 boom. Does that look like good support? Does it? Now, when the market finds good support, when price is dropping and finds good support, what's the logical, remember this is called Logic 247, what's the logical thing for price to do when it finds good support? Bounce up to the BBC. That's the green line. Okay. After it bounces to the BBC, what's the next high probability thing? The next logical thing. For me, logical and high probability, boom, interchangeable. Another leg to the downside. Leg, find support, bounce to the BBC, Another leg. Now, notice that this red and falling CFMA1 is starting to turn just a little bit. Could the market be finding support here? Possible. It's just above this trigger at 28.45. If price can trade through this CFMA1 and through this trigger at 28.45 and then through this support area, then we'll see that final target way down there at 2811/12. Okay. So I just wanted to cover that real quick because we talked about all these different things on the show yesterday. I put live alerts on the screen. That's something I don't normally do during the show. Kind of glad I did because I'm glad you had a chance to see this. Now, I tell you that price is always trying to get to a weekly trading zone, either the one above or the one below. The market is always on a mission. Okay? So let me back this up just a tad. All right. Once price traded below this zone, it's below the BBC, and whenever price is below the BBC, we anticipate lower prices. Okay? So as price is coming down on the left side of that CFMA1, it's pretty obvious, I think. If it's not, tell me, and then I'll explain it better when I come back. As price is moving down, pretty obvious where it's trying to get to. It got there. Okay. Now, price finds support, reverses, gets back above the BBC. When price is above the BBC, we anticipate higher prices. Below, lower prices. Above, higher prices. So once price got above the BBC, it became pretty obvious, I hope you see it, that price was marching, advancing to the zone overhead. It got there. Okay? Remember, price is always trying to get to a weekly trading zone, either the one overhead or the one below. Now, the distance between these, we got 28.12 and 28.80. Okay, if that was a 10, it would be 70. So, what is that, a 68-point move from zone to zone? 68 points. That's not a bad day's work. 68 times 50 equals. That's a $3,400 per contract move from zone to zone. Now, if you're not going to get long, most likely, unless you're just a zone trader, until price gets up here, so you don't get the effect of that full 68 points. But even if you got in at 28.40, up to the zone at 80, well, that's 40 points. That's $2,000 per contract. Okay, price achieves the objective. Now it gets below the BBC. We start to anticipate lower prices. We look left. When you cross the street, you look both ways. When you're trading, you only got to look left. Okay, we look left, and we know that there's support right here. So if we get into a move here, we know that we may run into a brick wall here, right? So a couple things you can do. You can trade to the wall, or you can wait until price gets below the wall. Price reversed. Now, let's just say you were quick to pull the trigger. You got short right here. Okay? With me? Because you think, okay, it's going to the zone below. When do you know that's not the case? When price gets back above the BBC. So what kind of risk are we talking about? Well, if you entered here, price gets back above the BBC here, might as well get out of the trade. because now price is trying to get to the zone overhead. Looked like it was going down, ran into support. Buyers came in early. I'll explain that another time. Reversed us, took us back up, put in a double top here at the zone. We get below. We now expect lower prices. Again, we know that we may run into potential support right here. We trade through it. We hit the potential support I highlighted yesterday. We bounce up to the BBC. Now we're in the process of creating that next leg to the downside that I was just talking about. All right, there you go. There you have it. My analysis, my take on how what we started yesterday finished up. Let me give you the numbers real quick from around the world. Cash markets starting here in the US. Then we'll go to Michael, get a recap of what happened in the live training room. Here we go. The Dow currently down 365 points. NASDAQ, now that's 1.5%. NASDAQ down 67, almost 1%. S&P 500 down 33, over 1%. And the Russell 2000 down 15 points, 1%, right on the nose. In the commodity basket, crude oil down $2.77. Trading 50.86 last. That's a drop of over 5%. I don't know that I've ever said that before about anything market related. A drop of over 5%, intraday anyway. In the Asian markets at the close, the Nikkei posted a loss of 68 points. Shanghai was down 9. Hang Seng posted a gain of 20 points. No movers and no shakers. And in European markets, at the close, the FTSE was up 27, DAX was up 82, and the CAC up 32. No movers, no shakers. That gives us a mixed day in Asia, a green day in the UK, and so far it is a big red radio Wednesday here in the US of A. Let's go to Michael and find out what happened in the live training room this morning. Michael, take it away.
Okay, I got it. Yeah, we had a good morning.
Awesome.
All right, let's bring that up. There we go. So let me do the audience view. Yes, you are looking at my screen. All right.
Okay, doke. All right, it's all yours. I'll hit mute.
Okay. All right. Here we go. Good afternoon, everyone. If you have not taken a free trial and you want to take a free trial with us, go to the homepage at CFRN.net. In the right-hand column, it says 5-day free trial, apply.cfrn.net. Click on that. Once you click on that, you will be brought to this page. You can go directly to this page as well. It's eminitrainingschool.com. But you will be brought to this page where all we ask for is your name, your email, your phone number. And you can tell us your biggest trading challenge so that we can tailor the one-on-one training directly to you. Okay? All right. Results. We had a good day today. We're having, knock on wood, having a good week, we'll say. Though after today, I got to work from a hotel tomorrow. And I don't even know what hotel it's going to be. But I know I'm going to do that tomorrow. Today, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 7th day of August 2019. Made 1 tick in the euro, 11 ticks in crude, 25 ticks in gold, and 13 ticks on the ES. And that put us at 528.75 on the morning session. Today it took 16 minutes and 1 trade to get to the goal for the day. At that point, we're up 162.5. And we took a total of 8 trades. So on the month now, we're only 5 days in, but we're at $1,597. That's averaging $319 per day. I love the volatility. On the year now, we're at $19,148. That's over $140. 140 days, averaging $136 per day. Okay. Now keep in mind, that is one contract, 2 hours per day, where I'm answering questions from lots of people and training, and not just trading. My charts have been really slow today. I think, the volatility, just is so much data when the volatility kicks in. But we'll start out with the gold. And what do we do with gold? We had 3 trades on gold. Okay, but we missed trades on gold. Right in here, once it determined it was in an uptrend, there was a long opportunity right here that we missed, another one right there that we missed, another one right there that we missed, and then it changed directions. Well, reset the cycle really, and there was another long right here that we missed, and a long right there that we missed. Now, I'm saying we missed it, but this one right here was probably going into the high of the day. That's probably why I didn't do that. This one down here I did just miss. Then it changed directions and started going down, and we missed that one. And we picked up this one. We got 15 ticks on that one. And I know some of the guys in the room, one of them got 48 ticks on that move. And I got 15. But I'm happy with 15. I'll take 15 any time of the day. Then there was one right here that we missed. And we got over here. I missed that one, but I did get that one for 5 ticks to put us at plus 20. It changed directions, but the slingshot was all messed up. And I missed that one and that one. And I did get that one for another 5 ticks to put us at plus 25 on gold. Now, gold has been all over the place because Trump's been saying stuff. And that's perfect for us. During the break, there was a long right there. That probably gave about 20-30 ticks. I'm scrolling, but it's not scrolling with me. And there's a short right now at 19.8. Okay, that was gold today. There was a ton of opportunity on gold. And lately it hasn't. Well, gold has been moving around a lot more because of Trump lately, but the last few months, gold has not been a big winner. On the euro, we got 1 tick on this one trade right here. Okay, it looks like I missed one right there, and then it turned around, and I missed one right there. And then it just got sideways. Okay, crude oil, my favorite market. I always say that. Hang on, waiting for my charts to catch up here. Still waiting. We had crude inventories come out today. And the inventories, still waiting for my charts to catch up. You see all this happened in the crude inventories? All that mess right there. Craziness. The number for this week is 53.55. $53.55 is what it should get back to. But on the crude, well, I'll just go with this right here because my charts are not reacting very well. Right here we picked up 10 ticks, and here we picked up 1 tick to put us at plus 11 on the crude. We missed a long trade right there, and then the inventories came out and gave us all of this business over here. Okay, so there were no trades in there, and we just stayed out of it for a little while. There was a shorting opportunity right there that didn't go anywhere. And let's see, in here, there was a long right there going up to the weekly trading zone. Hang on. Come on, charts. Wake up. Maggie, I think I got something to say. Sorry. I'll save my singing when I'm driving in a little while. All right, and there was a shorting opportunity. There was a shorting opportunity right there that I missed. Break even right there, and a short there that I missed. And then we get into the break. And let's just look at it here. Because during the break, I had to do normal stuff and go to the grocery store. There's a long right there, a short right there. And I don't think we had anything in there. And a little bit of a long right here. We didn't really have a trend going. So we definitely had a long up here. And okay. And now the ES. What did we do on the ES? We had one trade that we made 13 ticks on. I don't see a lot in here that happened during the break, but we had one trade right here and we picked up 13 ticks on it. Okay, and that was it on the ES. All right. No, not yet, not yet. No, I just saw the message come up. It just popped up. Nope, I'm just finishing up right now though. Okay. All right. So that was it for the morning session. We had a great morning session. We made $528.75. One tick on the euro, 11 on crude, 25 on gold, 13 on the ES. Today it took 16 minutes and one trade to get to the goal for the day. At that point, we're up $162.50. That was the ES trade for 13 ticks. And we took a total of 8 trades today. So on the month now, we're only 5 days in, but we're up $1,597. That's $319 per day average. On the year, we're at $19,148. And that's over 140 days, averaging 136 per day. 136 per day. Okay. All right. And if you have not taken a free trial with us and you want to, there's a couple of ways to do it. One is go to the homepage at CFRN.net. Over here in the right-hand column, it says 5-day free trial. Apply.cfrn.net. If you click on that, you will be brought to this page, which you can also go to directly. It's eminitrainingschool.com. Scroll down. All we ask for is your name, your email, your phone number, and we give you the option to tell us your biggest trading challenge so we can tailor one-on-one training to you. And you hit the send button. Once you hit that send button, you'll be sent all the information you need to get into the live training room every single day. Well, for 5 days. Okay, and with that, we can pass it back out to Studio A. In fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Dwayne, if you are ready, you can take the charts back. Okay.
Jonathan, that he was ready to dance, so
All right.
Let me pull the charts back. That would be my charts.
There you go. I see your charts. And I'm going to do that thing that I texted to you.
Okay.
And then I got to go because
All right.
we got to get on the road.
All right, no problem. We got it.
Okay. All right. Excellent.
For which I'm sorry.
Recap of the recap?
The recap of the recap. Today it took 16 minutes and 1 trade to get to 162.5.
Ooh-wee, that's a good bingo.
It
What'd you do
is.
different?
Nothing. Nothing at all.
What'd you do different yesterday?
Nothing.
What have you done different in the last 6 years?
I never do anything different, do
You
I?
are so boring. My goodness.
I am. But look at,
Yay,
I mean, if you could see
boring.
it right now, in the last 5 days, I've gotten the goal on the first trade, 3 out of 5, and on the second trade, the other 2. So, what we're doing works.
And
You just got to do it.
and it's so important for everyone to understand what I'm about to say. I don't want to jinx anything here, but the traders are so superstitious. You
I'm
keep
not
a
gonna.
rabbit's foot. It wasn't very lucky for the rabbit, was it? Okay, but anyway, if he gets stopped out on the next 3 trades, let's say tomorrow morning, again, I wish I hadn't gone this way, but let's say he gets stopped out. Now, is that going to change anything? Is that going to send him back to the drawing board? Is that going to eradicate, the successful days, the profitable days? No,
Not at all.
not at all.
Not at all. We've been doing the same thing for years and years. And
It comes down to this, folks. This is a business based on probabilities. Unfortunately, 9 out of 10 traders are unable to wrap their brain around that, or nobody ever told them it's a business based on probabilities. I mean, you're ruined for life because I just told you. Now, what 9 out of 10 end up doing is hunting for magic. Indicators, oscillators, gurus, crystal balls, holy grails, the list goes on. Why is it that God created a universe wherein we can never know with certainty what's going to happen next? But yet traders think that for $9.95 or $99.95 or for $9,995, they can buy a thing, a machine, a bot, or something that can outfox God. When God poured the foundations of the earth, he said, I'm not going to let them change the past, and I'm not going to let them know the future. Done. Here comes trading, here comes vendors, and here comes 9 out of 10 traders spending too much time and treasure to find out that the only magic in trading is the magic that you bring to the platform when you stand before it and go, you, sir, are a business based on probabilities. With that understanding, you can learn to become a consistently profitable trader. You can. But if you're forever chasing moonbeams, forever looking for that magic, do you agree that everything you can see, touch, feel, taste, was created by God? Okay? Well, he didn't create anything that allows man to know with certainty what's going to happen from one second to the next. Every second of your life is a surprise. Now, what happens in the next second, the next minute, the next hour, the next day, and the next week may be exactly what you figured would happen. Why? Well, because given a certain set of conditions, that's usually what happens. Oh, you mean the high probability thing? Yeah, I guess that's a clever way of saying it. Here, guys, I forget how much this zone-to-zone move was worth. I think it was over $3 grand. But when price gets below the zone, below the BBC, below the red and falling CFMA1, there's only one spot in this move where you might have thought things were about to change, and that's when our software printed an exit signal right here. And the next candle, well, blew that out of the water. It closed below the open of that previous candle where you thought things might be turning around, because the software said, hey, looks like the market's running out of steam. Okay, it's not perfect. Gets it right sometimes and not so right the others. And when price trades back up above this zone, yeah, it's above the BBC. It is the highest of probabilities the price is going to at least attempt to get to that zone overhead. Well, what if it doesn't? What if it gets right here and just grinds to a halt? Well, goodness gracious, there's a whole lot of room there to get your goal for the day, your points, whatever you want to call it. We got a curveball right here, and I already addressed that. You got a bearish cross, price below the BBC. All right, you ignore this potential support that you're about to fly right into. It's a you go short. Is that the end of the world? No, because right here price is back above the BBC. See, that's a pretty thin line. It's either below it or above it. Yes, sometimes it straddles it, right? So you get in here because it's below it. Well, right here when it's closing above it, you get out, because you know you're on the wrong side of the BBC. If price is above the BBC and you're in a short trade, you got a problem. If you're in a short trade and price is above the BBC, you got a problem. But it's easy to fix the problem. You can let your hard stop get hit. Or, as Mike Reed would say, God, I miss him. I wish he'd come back. He's coming back, guys. He moved. It's a long story, but I've been in touch with him. You can scratch out, which means you got a hard stop, but price is already above or below the BBC, defying the direction of the trade you put on. You can just go ahead and take an exit, but I suggest you be careful with that technique. I know that in the live training room every morning, where Michael teaches our methodology, we use an 8-tick hard stop on every trade. 8 ticks per contract every trade. And we're only teaching you with one contract, okay? Now, I know that some students, when they get started, that 8-tick hard stop really seems like the end of the world, even though you're only trading in sim, because really what you want to do is you just want to get that goal for the day. Why is that? Why? All right, let me finish that thought. So, price is coming back, seeming aggressively. So you're thinking, oh man, this thing's going to come back, going to take me out. I'm going to be down 8 ticks to start the day. I won't have it. So you scratch out when you're down 5 ticks. So the market goes down 6 ticks, 7 ticks. You're feeling real good about your decision to scratch out at 5 ticks. And that thing reverses and takes off like a rocket ship in the other direction. And you're like, oy vey, I could have been done for the day. I could have had my goal and been done. But I'm monkeyed with the stop. Once you set a stop, once you identify your entry and set a stop based upon that entry and market structure, be careful about moving that stop. Now, I know Michael teaches you a very specific rule on how to, we use what we call aggressive risk management, and that's what he's teaching you, and it's a good thing to learn it, okay? However, when you move into larger time frames, see right here, let me give you this example right here. We triggered on this candle yesterday at 28.65. All right. Now price started to move up. If I remember this correctly, it came back down through the trigger and went back up again. We could go to a 1 minute chart and see it specific. Oh wait, you know what? No. Look here. 28.65 is this line down here. That was the target I was pointing at. So 28.65, right? It goes up to the initial target there, 28.70. Okay. So conventional training will tell you you now move that stop up. But see, we do things a little bit different. This trigger at 26.65, it's not just a trigger, 28.65. It's an important price, important area. And what do I tell you every day about important prices, important areas? They almost always get tested. Okay, so if I prematurely move my stop to my entry, which again is a smart thing to do, but because our work provides you with a slightly different type of number to work with, you should expect price to come back. So if you move your stop to your entry where you got in, on most alerts, you will get stopped out. Just know that, okay? Let it come back and test, especially if you're looking to stay in it for an extended move. Let it come back and test once, twice, or let it go so far that if it comes back and takes out, you don't care because you've locked in so much profit, right? All right, enough of that. John showed up. He told me he was going to pop right in. Let me look. Michael's gone. Stand by, John. There he is. John, welcome to the show.
Hi there. Thanks for...
Sorry to keep you waiting.
Yeah, look, everything's going kind of the way we thought. The low in the market this morning actually was sort of what we were expecting Tuesday, which happened overnight. The low, so everything's sort of happening kind of sooner. But remember, I said the market could go down and just literally turn on a dime. We actually mentioned 2,800 that we hit yesterday was where we thought it would, hold. And look, the way this thing is shaping up here, it actually reminds me of the bottom in December, after the October, November, December correction. It kind of reminds me of that.
Let me go continuous chart. Oh, no, really? All right, I'm gonna leave that alone. Let me go back, see if I can get back. All right, we'll look at that another time. Go ahead. I know what you're talking about, though. The worst December since 1932.
Does this go back to October, to December?
Well, let me bring up my, but something just went awry. So let me just bring up, my other platform, and we can look as far back as you want to look.
I mean, we said yesterday that if it sort of turns on a dime, which it did this morning, and starts recovering, and some stocks are looking good, others are not looking so bad.
All right, here's the SPX.
Yes.
Do you want futures or is it cash index? Let me put it on daily.
Well, you see that you see the spike down there. There's been a spike at each of these bottoms, and
yeah, you're right. There has been.
This is what I'm referring to, because if you look at today's,
look at that V bottom there. That's one of the most incredible V bottoms I think I've ever seen.
Right. It really is. It's the mother of all V bottoms for sure. And look what happened. It's slightly different here. But we opened, but the point is, look, you've got this sort of spike, the previous spike here, and I said that if it holds here, you really could rocket up out of here. And, if we get back above 2,900 and gap higher, that would be very, very impressive, frankly. and it could lead to a new highs before you know it.
I think we both are leaning towards that 2,800, though. Well, at least I am. I'll not speak for you.
Yeah. Now, look, it's fairly. If we break down, if we break down below this consolidation, forget about it. All bets are off, and we could be. I mean, in all honesty, we could be looking at a correction of the magnitude of what we had before. I mean, down to I think, where did you have 2,600? Was that one of your targets? Look, I mean, we're kind of in an air pocket. You've had a double breakaway gap to the downside. That's very dangerous. We've got to do something pretty miraculous here to
this
rebound.
Bounce in the cash market looks more impressive than the bounce in the futures. I'll go to the futures.
If we, that's what I'm saying. This is a pretty important kind of, it's. All I can say is the market's put its foot down at that 28.75 twice, and look at that spike there. The thing is, that is a very, very, that's a potentially major reversal. This thing, it's a key reversal. We're just consolidating on the side now. If we start breaking out above 28.80, get back over 2,900 by the end of the week, that's pretty big. If we get to 29. If we reverse the whole week back up, that would be epic. Now,
see the difference in the daily candle on the futures versus what we were just looking at on the
SPX? No, I see that. But nonetheless, you can see that both the charts are looking like the potential reversal is developing here. Now, we got to get through tomorrow and Friday, which
do we have any big news tomorrow or Friday?
I don't know.
I'll take a look. I'll check the calendar while you're talking.
The jobless claims and things like that. But look, I think it's should mention it here on both our behalfs. I think we've done an incredible job in the last few months of calling these markets, especially the metals. As you know, I've been relentlessly bullish on the metals and calling each new high, new range. I even said it would break through 1,500 before the end of the week, and we've done that. And we've done it with authority. I said it would go through 1,500 with authority. It's interesting that we've gone straight to 1520 on the December, and we're not yielding much ground. With the previous correction took us back to 1510. And that's kind of what I was expecting. I don't expect us to break down. I think this gap is going to hold. And the silver, everybody is saying, oh, what about the silver? I said, it's going to go. And boy, we're up 68 cents. That's the biggest move in silver that we've seen in a long, long time. So
that's huge.
Yeah, it's an epic breakout, and that's causing all the gold stocks to gap higher. I said the nugget would go through 100, the J nug. And not going to get to 40, and I think it'll go to 50. I think the J-Nug is going to go to...
Look at that thing. Look at that.
Yeah, I told you 100. What did I say yesterday? I said it's going to go to 100.
Good call, John.
Thanks. I mean, listen, I know, to just a memory refresh, an unbelievable job on Tilray. I mean, I called 300, and we hit the number right on the head, and I called it all the way up. And... This is an epic. I said, look, we looked at the consolidations. This is a classic example. Look at the first 1-2 right down at the bottom in June. It was a baby kind of a move. Then we moved up and gapped higher. Then we had a bigger consolidation, a bigger kind of a megaphone. Then we gapped higher. Now we had a huge consolidation. When you see those huge consolidations getting bigger as you go higher, it tells you you're going to have epic upside moves. You're going to see something really, really dramatic. And I honestly think we're going to go to 120 to 130 before this thing pulls back meaningfully. I don't think it's going to give up much ground. I think it's going to stay over 100 now. And it's probably... for all we know, it could be out of a 200 or 300 before too long. Look, if you could pull up the gold chart, the December
only high
gold.
impact news we have, John, that I see right here for the rest of the week is PPI on Friday. And I think
Oh,
tomorrow
that could
night,
be a big deal.
tomorrow
That could be a big deal. You know, actually
Japan's
that could
GDP comes
potentially,
out.
yeah, that could potentially move the markets. You know, and maybe we get to 1550. That might be something that would cause it
Which
to
chart
pull
did you
back
just ask for? I'm sorry.
for the December gold.
Okay, that's good. Okay.
Okay.
On daily?
Can you? I probably need to go to a monthly or a weekly. I think.
Okay.
I think a monthly.
Weekly.
Try the monthly. Try the monthly.
Okay.
Yeah.
All right.
Okay. Is that a futures contract you got there?
It is.
Yeah, that's weird. Because
It's a continuous.
Is it a continuation?
It is a continuous chart. Yes.
Can you go to the actual futures? The December
just
futures.
you want just the month of December?
Yeah.
Hang on. GCZ. There we go. Okay.
Okay. Thanks very much. That's perfect. That's exactly the same as what I've got.
Okay.
Now look, this is a dynamic chart of monumental proportions, and if you could squeeze it up a little bit, like you had it a few minutes ago. No, the other way. We're kind of like that. No. Squeeze it up. Squeeze.
Oh, closer together.
Together. Push. Yeah, a little bit more. About there. Okay. Now, look. This is a classic. Kind of a textbook situation, because look at the downtrend from 2014, right? You know, the previous high is about 1550, and we did gap down. Actually, on this particular chart, it says
1532.40.
Yeah, it says a gap at 14, but we've already taken that out. But here's the thing: look, we had a doji bottom right down to the bottom, and we were in a downtrend for all the way to 2016. Had a doji bottom, had a huge up
Oh, look, we had a
move.
doji bottom right here, John. Caught a bounce.
Right.
Down, yeah.
We had, actually, you know, we've had 3 doji bottoms. That's amazing. I didn't see that. 4 of them, because the second doji was a bullish doji, that green one. So here's what I'm getting at. I came up, and by the way, I calculated this number from different things before I did it, but I put out on Twitter 1950 about a week ago, a few days ago, is my new upside target. As you know, I went from 1550, which we're about to hit, to that was a number I came up with several months ago. I said maybe 1660, 1700, 1770, and now I'm going all the way to 1900. Why am I going there? Because what you're looking at is a very rare chart. In the last time I saw something like this, I think it was cocoa, and this was when it was down in the teens, and it came up to the 20s or somewhere like that, and I said it's going to go to about 28, or we worked out the measured move. But here's the thing: you take that bottom, you see the 1085 or 1090 where the doji bottoms back in 2016, 2015, 16. Okay, you take that number and say 1550. I think the difference is about $450. Add that to the 550, and it takes you right up, or add it to where we are right now. It takes you up to that 1950 to 2000 level, and that's called a range extension to the upside. You double the range when you. Why is that going to happen? Because as soon as we hit, now what's probably going to happen is we're going to hit new contract highs. Okay, it's the same as new 52-week highs or new 6-year highs, but it's basically new contract highs, and this is a very big and long chart. And you know, they'll probably, when you hit a new contract high, usually get a bit of a pullback right after you hit it. So we could go possibly to 1600 or 1575, somewhere like that. Maybe we pull back and consolidate a bit in the 1510 to 1560 range, something like that. Then after that, it takes off, and it can really, really motor higher in a way you can't even imagine, with the same ferocity really that we've had, you know, in what we're probably in a developing third wave here to the upside. Because if you call this wave 1 down in 2016, And this is a kind of an ABC zigzag type deal. And here we had a 1, 2, and now we're in a third wave. I mean, you know, the measured move on this is certainly projecting it higher, and it really could go all the way to 19 because of the double. You know, when you're hitting new contract highs in a 6-year chart. That's like unheard of. It's epic. It's a really, really big deal, and it's the same deal. I mean, you know, it's just amazing when you think that just $250 ago, you know, there were banks selling billions, you know, not just 7 billion one day. They sold multiple billions, tens of billions of dollars worth of gold, trying to smash the gold price down to get one of these banks out of trouble. Maybe it's Deutsche Bank, who knows? But some bankers allegedly heavily short the gold. They try to get it bailed out. It wasn't possible. And now there's a massive short squeeze going on. And you know, look, you've got to get through all those billions of selling. I mean, this thing is a phenomenon that we've possibly never even seen before, because we're actually rallying. You know, we're rising at an accelerating rate right now, even faster than we went up to 1100 to 1900 the last time around. In a way, it's the way this thing is sort of unfolded here. So, and this time the dynamics are very different because, you know, listen, you got 2,000 billionaires in the world. If the dollar starts breaking down or the UN starts, I mean, look, think about the UN. The UN is I've said this before, you know, in the same way as, you know, baby boomers who've lived through the growth of the boom, you know, the post-war boom and everything like that. And they've seen the dollar go up, you know, over time, and the prosperity and everything else. And the US market has gone, you know, being the #1 in the world. You know, you sort of get mesmerized because you think you're invincible, and you know, worse things can happen in the future, and that's happening in China. The dollar, the UN over there, they've had the same thing. They've seen 25, 30 years of mega growth, and they've seen this UN soar to the heavens, and all of a sudden, it's something changed, and next thing you know, the currency lost 10%, rallied up again. Now it's lost 12 or 13%. And it really looks like it's going to break down and possibly give everything back to the 2000 levels. So the Chinese could be looking at a double decade, you know, the lowest currency in 2 decades. And remember, look at the Brits. I mean, the pound, which is, you know, really in the doghouse right now. It's a 121 3/4. I mean, the Brits have been buying gold, and rightly so. I mean, if you're a billionaire in Britain, you know, if you were worth $15 billion, say, when the pound was at $1.50 or 60 before the Brexit, you know, you're only worth 10 billion today. Think about that, or maybe 12, you know, 12 billion or something like that. You know, so this hedging by these billionaires is a very real prospect in the years ahead, if we have this sort of competitive devaluation going on with these different currencies. But in China, where you've got 500 new billionaires, they're much more attuned, I think, to defending their wealth against the falling, you know, industrial might of China. And look, the poster boy for this, to put it into absolutely crystal clear terms, you know, we had a boom in 2000, the dot-com boom, where everything went to the moon, including Yahoo, which at one point was worth more than the economy of Spain, Norway, and Italy combined. I mean, can you imagine? Yahoo back then, but it was doomed to implode, and there's nothing in this universe that could have maintained that value except gold. If they had literally bought up the entire gold mining industry with their, you know, with the value of their currency, effectively being the stock, at $135 a share, they would be the biggest gold miner in the world today. They'd be, you know, 10 times bigger than anybody else. I mean, it would have been the switch of a lifetime. But, you know, because they not only would they have done it at the bottom of the gold market in 2001 or 2000, but they would have enjoyed, you know, multiple upside from all the growth of the gold industry over that time.
Right.
Or if they'd just gone in and bought gold, period, they would have ended up making 7 times their wealth. They'd been the first $1 trillion company a long time ago. Think about that. So it's an incredible thing. And when we do, when things when it all hits the fan, wealth can evaporate very quickly. I mean, look, how many billionaires have been wiped out since 2007? You had a guy who was worth $30 billion, Ica Batista in Brazil. I mean, you say, how can you go wrong when you're worth 30 billion? I mean, ask this guy and he'll tell you. I mean, he basically, he might be worth a few million today.
How does a communist regime print 500 billionaires? That's my question.
Say again, sorry?
How does a communist country print 500 billionaires?
Yeah, but it's basically a capitalist country today.
Yeah, it is, I know. But they still hold on to their communist ideology.
Yeah, but it's sort of like Japan. If you bought the market in Japan in 1951 when it was at 40, and 40 years later it's at 40,000, 39,000. That's how it's the same thing in Russia. I mean, nobody knows this, or very few people realize this. But when the Russia market imploded in 1998, and you saw those pictures of them beating the doors down on the banks, and there was a real panic. That was the best buy. And that was the time when I came out and said, it was November 1998. And I basically said, put all your money in Russia, or if you can't do that, put at least 10% of your money in Russia. Well, do you know how much that market went up from 1998 to 2008? It went up 100-fold, 100-fold. That market went up 100-fold. That's why there's so many billionaires in Russia.
Now,
So,
there was also that time period in time was also referred to as the brick trades, right? We're talking
that was the
Brazil,
emerging,
Russia,
the BRICS really came
India,
into being.
China.
And I remember watching the first, remember 1999, 2000 space station got launched, and the Russians were putting the first components, and I kind of saw that, you could see the rise of Russia coming before your eyes. As the capitalist thing, listen, in 1998 it was really very dangerous, because they could have gone back into communism and all kinds of worse things than today, but they managed to pull it off, and they became a pretty good capitalist country. But they have suffered mightily since 2012-13. They had a huge run up. They had a secondary bottom in 2009. As a matter of fact, they were the first market to bottom in early 2009. They bottomed in January, and they ran up dramatically. I think the market went up fourfold in a very short period of time. That's a lot. But that's where it stopped. And ever since then, Russia's been a total basket case because of all the problems with Putin and the oil price crashing. So, and their economy in 2012 or 11-12 was about 2 trillion. It's about 1.5 trillion today, maybe even less, maybe 1.4. I think it's been down as low as 1.2. So they really have had a pretty brutal contraction in their economy, and the U.S. has gone up massively to new. We're currently at about 22.25. I think 21.25 trillion economy right now, and but I think you've got to take a lesson from that gold today. That looks potentially very, very bullish, and there's a lot of things that are, look, there's Kyle Bass, that's the guy's name I couldn't think of yesterday. He made this, he basically said this, he gets a sense that it's like the 1998 Asian collapse in the making.
Right.
That's sort of emanating in China. And the thing is, even though everybody thought China had tons of dollars, they used all those dollars to bail out the banks and things, and who knows what they're doing with that money, with the administration. They're trying to stimulate the economy and everything. So things could unravel very rapidly over there, and could potentially drag the world down. I mean, look, in 1998, it felt like the end of the world when the Asian collapse happened. But you know what? And people went to Asia and said, oh my God, it's going to take a decade to clean this up. It's going to take years. You know what? And I think it was all kind of forgotten about between 6 months and a year later. And next thing you know, we have a screaming bull market into 2000. And I think the same sort of thing could happen here. We could stumble here in the next few months, and then obviously the Fed's going to get in, like they already started. And I actually think, I was thinking about this morning, I think we're kind of in a new paradigm that is probably going to last us till 2029, 2030, where the Fed, because of what the Fed has managed to do in the last 10 years or so, they kind of think they're invincible. They think they can do whatever it takes to just like Yellen said, there's never going to be any more pullbacks and things like that right before we crash big time in 2018. But don't underestimate what I really see coming, and I honestly see this coming, is we're probably going to run into some big problems in 2022 or 3, and we may go down even below 10,000 for a brief period of time. But I think the Fed will step in and they will reverse it back up just the same as they did in 1921, 22. We've seen it on the chart. We looked at it a few weeks ago. Very fascinating because the market got cut in half, and yet it recovered. And remember, the Fed was only 10 years old then when they went in and they went into bat, and they pumped up the market. And guess what they did? They caused the Roaring '20s into 1929. And I think the same thing could happen this time around, where there's one last kick the can down the road. Maybe they got to kick the can down a bit right now. But what I'm saying about this new paradigm is the Fed are going to be more proactive. They've kind of made a pretty strong case, like you've never heard before, about keeping the growth going, keeping the growth, keeping the recovery going, or the boom going, and doing whatever it takes to keep it going. And that's really what they've been saying. It's not quite what Draghi said, where he's going to do whatever he takes, but the Fed really have kind of thrown down the gauntlet, and by doing what they did in the last week, they kind of have come through. But now, because of what's going on, it's more than likely that we're going to get 2 or 3 cuts or more going into the end of the year. And so this is a little bit of a kick, this is kick the can up the road a bit, right, if you like. So you sort of kick the market a bit higher ahead of 2020. And then possibly the next big hit, which will be a rapid version of 2007 to 9, will be the one where they just go all out and kick the can down the road for the last time. But the next time is going to be the what I consider to be the modern day depression of the 2030s, where we'll probably go through a decade of adjustment like they've never seen before. We're probably going to have mass unemployment because of automation, and there's all this debt that is just out of control now, 260 trillion worldwide, where it's 5 or 10 times the size of the world economy, will have to get worked out. They'll have to be monetized, or they'll have to be, they'll have to start over somehow. And it's probably logical that in the early 30s they're going to come up with some kind of a formula to put the past behind us and start over, in a whole new growth cycle. So that's kind of the way I see it. But the power of this bull market in gold is something enormous going on out there for this level of buying power to come into the gold. And listen, it's only just starting, because the volumes that are going into the gold today, the monetary volume is minuscule compared to it's like a minus. It's probably 1% of the market volume, monetary volume every day, or maybe between 1% and 5%. It's very, very small, and it could get a lot bigger. And remember, there's a lot of positives. There's a declining output of gold. Listen, it might be they'll be producing less gold, but the price is going to go higher. as far as getting new mines online, any big mine is going to take 5 or 10 years. So that's not going to affect the price. It's not going to depress the price, if you like. And then you've got the you've got the Chinese population that if there's a panic, they could be going out and buying massive amounts of gold to defend against a falling yuan, maybe a falling US dollar as well. And the second thing is you've got the billionaire factor, where you've got 2,000 billionaires around the world. And by the way, overnight we made new all-time highs in the British pound, probably the Aussie dollar, the Canadian, like a whole host of currencies are making new all-time
Australia
records.
did a surprise interest rate drop last night. I think Bill in the Telegram channel in our discussion group, he brought it to my attention.
Well, Australia is in trouble. The market has really gone nowhere. For 20 years, it's been maybe even 30 years. It's been sort of stuck in a kind of a range, a little bit like China, but for a longer period. And listen, Australia's done fantastically well because they haven't had a recession in 25 years. But the other side of the coin is, they rely on China a lot, and they kind of had a pretty big bust in the early part of this decade. And things have turned pretty sour in Australia. I've been hearing horror stories. It's kind of like San Francisco and Los Angeles. People
really
homeless in the streets and everything. I never thought I'd see that. In all honesty, but especially when the minimum wage is $20 an hour in Australia. You can make a lot of money as a garbage collector down there, literally. So, some of these guys get paid a fortune. So it's if you're willing to work in Australia, you're going to do well. It's kind of like the American dream, but it's definitely turned much more bad. It's much tougher recently. A few years ago, they had this incredible employment. I think unemployment the employment side of things has turned a lot more sour, and because we got some relatives in Australia, and that's what they're telling us. So it's not like it was. So this rate cut is probably a very welcome development, and probably overdue. And it's a sign that the Fed is setting the tone, and the rest of the world is going to follow. So ultimately, the best thing could ever happen to the economy right now is for the dollar to go down substantially, and I think that's going to lift the world economies out of this current rut that they're in, and potentially help China down the road as well.
Here's the Mexican peso, John. Now, did you just say that the British pound put in all-time historic highs?
Lows.
Lows.
No, gold in pounds. Gold in British pounds.
British pound?
Yeah, gold versus the British pound. Yeah.
Okay.
The British pound looks pretty bad. It kind of looks like it's going to break lower, because even though Boris is a great guy and is probably going to be very bullish for the pound once this decline is over, maybe the day they leave Europe will be the bottom, but the inevitability of getting out of Europe is obviously having a very bad effect on the pound, and unless there's a referendum or some other kind of a thing that comes out of nowhere. If there was a referendum announced in Britain today, I would say that pound would be $1.32 or $1.35 by tomorrow, because it's a pretty good chance that the second referendum would vote to stay in the UK, stay in the European community. I think this was a one-off deal where people kind of miscalculated, and it's caused an awful lot of the country is divided, just like the US is in a lot of ways. You got the whole of London wants to stay in Europe, about 9 or 10 million people in Europe. In London, 90% of them want to stay in Europe. Why is that? Because they control all the business with Europe, the finance capital. Scotland wants to stay in Europe. Wales wants to stay in Europe. Northern Ireland wants to stay in Europe. There's only pockets of the country want to leave. But the fact is, they had more votes, so it looks like they're going to exit. Now, I think the hard break, I'm not 100% sure about this, but there's a lot of strings attached to getting out of Europe, penalties, and they're going to pay a ton of billions and billions of dollars just to get out of the EU. I don't know whether if they do a hard exit, whether they're just going to avoid those payments or not make them. But that would be an advantage, in my view, to exiting without a deal, if it's the case. And that's the sort of thing that could turn the pound positive. I mean, look, the pound going down, it's gonna find a bottom sooner or later, and it's actually kind of bullish for the UK economy, because it's going to be more competitive vis-a-vis the US and Europe in terms of everything. So, and the pound has had a habit of going, the last time it went down to 120, went all the way back to about nearly 2 before dropping down, it's been between 1 and 2 a few times in its life. I mean, at one time it was $5 to the pound. The pound was way, way higher. It was up at 5. So, the pound is suffering from the same demise as the US dollar in a larger sense. And who knows? I mean, maybe we won't see $1.30 anymore, or $1.50 on the pound. You can't tell until you see how Britain performs outside of Europe. If they outperform, the pound will probably go a lot higher. If they underperform, it's probably going to stay the same or go lower. So there's no guarantees. There's no guarantees on the pound. It's kind of
the GDP comes out in Great Britain, I think Thursday morning.
Well, that could be interesting, because if the GDP comes in strong, that actually could help turn the pound. So, because I guess they're preparing for an exit for Europe, so it might be interpreted that the threat of leaving Europe is already helping the country. I mean, look, which country? I mean, look, apart from the weather, which country would you rather live in, or work in? Spain with 14% unemployment, or the British, or Britain with just about the lowest unemployment ever. It's very similar to the U.S. There's almost there's virtually no unemployment in England. That's why so many people want to get in the country, because they can get a job in a nanosecond. So it's a very similar situation to the U.S. That's why they're being overrun with immigrants in just the same way as the U.S. is.
John, did I lose you?
Sorry?
You dropped, your voice dropped out for a minute. I thought I lost you.
Listen, I don't want to say something that's not true, but I did see on Twitter last night, there's apparently this gunman that everybody said in El Paso was going, apparently what motivated him was he got mad from the Democratic debate about giving free health care to immigrants. That's what
a 21-year-old kid. That's crazy.
Yeah, well, that's what they said anyway.
Well, I don't. Nothing they say surprises me, and for all I know, it's the truth.
They're all saying it's all because of the immigrants, but when you think about it, that could make a lot of people mad, and it probably did.
I got one thing to say to the youth of America: put down your damn phone and pull up your pants. I'm so sick of seeing people's butt I'm trying to buy groceries, trying to get some dinner. I got to look at some guy's posterior. It's not fun. And you know what? And they're so silly. They don't know where that came from. Do you know that they call it sagging? But you know where that came from, John?
Yeah.
It came from prison.
Oh, yeah.
When a guy's looking for a date, he lets his pants sag. He sachets across the lunchroom or the cell block. He's looking. And now these gangbangers are running around doing it on the street, and somehow they think it makes them a tough guy.
Oh, that's disgusting. That's a disgrace. Listen, while we've been talking, the silver just jumped another 10 cents.
I didn't bring up the silver chart. Let me do that.
Yeah. I mean, we talked about this before. This thing is so dynamically bullish. I mean,
Look at that.
if you
That's
go
a
back to
beautiful
the,
thing.
remember what I said a couple of days ago. You know, once we take out that 1660, or even yesterday I said it. You know, this thing is going to surge. Can you go back to the chart you had a minute ago? The longer chart.
I'm sorry, John. Which one? The British pound?
The bigger before you expanded it out. Go back to the full picture on the silver.
Oh, the monthly. Yeah, sure.
Yeah.
Here we go. There you go.
Okay, look at where we are, and look at that chart. I mean, we are ready for, look, we've got expanding volume and expanding range as we go higher. You know, the big surprise, this thing could do a Bitcoin. I mean, listen, you could go 24, this thing could be at 24 before you know it. I think we're going to go to 21 right now. I said 18, 19 yesterday, but I actually think we're going to go to 21, maybe 22, probably take out that previous high before this thing stops. And, you know, if we go to 21, that's going to take your gold up to about 1950. So I think we're in, and I said a little while ago, you know, gold could do a Bitcoin, and I think it's underway. It's underway. And look at the base on this silver. It's just ultra dynamic. It's just dynamically bullish. I only use that expression when I'm really, really bullish. And right now I'm really bullish. And I think
Got to take out this 22 area, and
24.
Take out
You're right
this
up to the 24.
area.
Yeah. But remember what happened last time. I mean, boy, you know, we're getting up to that 18 and a half area. You know, maybe we go up to 19 and come back a little bit in September, and then the next thing you know, we're going into the end of the year. So there's other factors that are probably, if you haven't. Well, we've looked at the silver chart before. The silver chart's a little bit behind the curve in the gold because, you know, it would be the equivalent of being at $20 to be that kind of V bottom, or that, you know, the where we're going to hit new contract highs on the silver. So, but this is a pretty powerful deal going on here. Can you go all the way back to 1980? Does this chart go back to that?
I'll have to go to a different chart, but yeah, I can, I believe. Let's see. I don't think this one goes back that far. No, this one only goes back to 98. Let me find.
Yeah, but you know, see the difference between where we are today, Dwayne, with the kind of base that's been building. The previous base was a much longer, flatter base. This is a more dynamic base developing here, and it's.
I guess I can't, John. I thought I could.
You know, another thing that I can tell you is pretty important is, you know, characteristically, if you look at the previous run-up in silver during, you know, from 2001 onwards, we had a slight anomaly where, you know, every low has been higher than the previous, except for that 2008 crash down where we briefly were around $8 and $9. That's, by the way, that was the time where somebody on the show, one of our listeners, turned 5,000 into 100 grand on the run up to about 15 off our advice at that back then. And I told him that it was about a 15 or 16. I just said sell, and that was before the pullback. But then, or it might have been the previous one. I forget. It was, well, anyway, he did extremely well. It's not many people can do that. So, but look at this, you know, it's quite reasonable to remember that the silver's in the same boat as the gold now. The output from mines is declining, so supply is tightening up, and it's not like the gold. There's not much stockpile in silver anywhere, really. So the potential for an extreme shortage to develop in silver is a big deal. And look, you know, when you go and buy silver, if these guys get a sense that the price is going to be higher, you go into a silver place and say, I want to buy some silver, and say, look, we don't have enough, you know, how much do you want to buy? Can only sell you half of that today or a quarter. because if they think the price is going to be higher tomorrow, they're probably going to wait, So they might, the silver producers might be holding back supplies, if you like, because they can tell a lot of, they can tell when look, if you notice, the silver ads have increased on TV a lot in the last week or two, the last few weeks, and they haven't really caught up with the present. They're going to be screaming that. Just one second, got to take this.
You need to get that. All right, guys, I'm gonna have to go here pretty quick. Let me walk you back through. We already covered this. We talked about that CFME 1 could be potentially support. It was. It's now put us back above the BBC. And this important area yesterday, that's what this line represents. So we'll close above that. High probability is we're going the zone overhead. Well, the Dow last night, we said to consider being long, 25,940. Market made 90 points available. We said consider being short, 255.85. The market made 200 points available. That is this week's zone, and you see how we turned right at it. On the Russell, consider being long 1508, and the swing high was 1508.4. Consider selling 1479, swing low 1474.70. In Q, that is this week's zone. Consider being long here, short here. Now these are the concierge. That's a static report based on previous price behavior. Logic 247 is a dynamic in the moment 24/7 alert based on current price behavior. And with the two line up, current and previous, it can be powerful. Crude, last night we said to consider selling 53.10. The swing low represented $2,580 per contract available. The exit signal printed at $51.20. 51.20. 2 grand. Gold, last night's report said to consider being long gold, 1506. We put in a high of 1522-ish. $1,600 per contract available. That covers the majors. Let's go to our good word for the day. If you have any questions, get a hold of me. I'll be in Telegram all afternoon. If you need something, hit me up. Now, good word for the day. We're going to talk about your circumstances. Maybe they aren't so good. Maybe they could be better. But let me just say this. Despite the circumstances, whatever they are, God is with you. He has not left you, forgotten you, or forsaken you. He said he wouldn't, therefore he never will. Hebrews 13:5 clearly says, I will never leave you nor forsake you. Several times in one chapter, Genesis 39, the Bible tells us that the Lord was with Joseph, but that didn't exempt him from jealousy and betrayal or the advances of Potiphar's wife or her lies that sent him to prison. The Bible says in Psalm 105:18, they bruised his feet with fetters and placed his neck in an iron collar until the time came to fulfill his dreams. The Lord tested Joseph's character. Joseph didn't know it, but he was in training for reigning. God wanted to see if he would choose trust over lust and obedience over expedience. It's in looking back that you realize why one of God's names is Redeemer. He can redeem everything you've been through, the good, the bad, even the ugly. Now, the lesson Joseph learned is this: God is with you even when there is no evidence He's with you. He's walking beside you, working with you. He's going ahead of you to rearrange circumstances in your favor. His word says, I will never leave you nor forsake you, so that we may boldly say, we may quote Hebrews 13:5, the Lord is my helper. I will not fear. What can man do to me? But sometimes, in the plan of God, things do get worse before they get better. That's when you must tighten your grip and lean harder on God. Hebrews 10:35. Therefore, do not cast away your confidence, which has great reward, for you have need of endurance, so that after you have done the will of God, you may receive the promise. That's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.